I'm Peter White. Welcome to the Inside Network. Welcome to INDepth. I'm Peter White, and my guest today is Jodi Stanton, founder and CEO of Rush Gold, which her position, of course, is gold is a must-have asset in any portfolio. Jodi, welcome.
Thank you, Peter. I appreciate you having me.
Well, you've got a very diverse background, investment banking, venture capital, consulting. How did you get into this business of digital gold, if I can put it that way?
Well, I've transacted it both at the big end and the small end of town. So and I've learned many things along the way. So on Wall Street, I was going to work in a town car and going to black tie dinners and really working under the precipice of the godfathers of financial engineering, Nobel Prize winners among them. And then my sector collapsed, long-term capital, and lost $4.6 billion, and they had to be bailed out by the Federal Reserve. So I felt like I was part of the problem, if you will. Aside from that, I have also transacted in the small end of town. So I did travel the world, or I have traveled the world as a mountain climber, and I've also, I bicycled 45,000 kilometers around the globe in many developing nations. And I found that those people were often quite generous and generally quite happy. And I think for me, it was really about an awareness of the wealth gap and the fact that it was growing, not getting smaller. So I felt that money was broken, and quite frankly has been for a long time. So I took an 80% pay gap. I moved to Australia, and for the last 6 years, I've been diligently building a real asset technology platform to do my small part in addressing this really big problem.
Well, the traditional portfolio construction 60-40 for the balanced fund, we've had probably the biggest drawdown in history in the bond markets. So how does that impact on where gold should or could fit in a balanced portfolio?
Well, bonds have served that role as capital preservation, right, for a very long time. And for the last 30 years, in our lifetime, really, bonds have created capital. Now we're moving, as interest rates, as rates rise, we're moving into a complete new market cycle, where now bonds are destroying capital. And so this actually has a two-shot approach, because not only are the prices of bonds going down, but at maturity, you're receiving money that is worth less because of inflation. So there's sort of a double whammy there, if you will. Enter gold. Gold can take on that capital preservation role in a 60-40 portfolio now that bonds are moving into this new cycle.
Is there a number that you think of that 40 that bonds would typically have that you'd like to see or is suggested in terms of holding gold?
It's all about a diversified portfolio, right, Peter? So, a lot of people have traditionally said gold should be between, 5 and 15% of their portfolio. What we're seeing now in the market is, with the demise of bonds playing that role, is that gold is coming in and people are increasing their allocation above that.
Do people understand the power and position of gold potentially?
Some people do, very, very much so. But it's about that. The benefit of gold is that non-correlation to other assets.
And is that understanding on an upward curve, do you think, in your experience, your recent experience?
Yes, I think I think that's filtering down into mums and pops, to be frank. I think it's not just the big end of town. Governments are the biggest buyers of gold. They understand how gold works, but I think it is reaching the everyman, and it's not about overweighting in any one asset class. But I do think gold has a role that is could potentially be more prominent than it was before because of what's happening in the bond market.
Can we get to the nitty-gritty of the Rush Gold offering? What is that offering? What are the opportunities, and what are the benefits of investing in gold via Rush Gold?
Well, we have pretty big goals, Peter. So we're building a financial institution based on a real asset. And we've started with gold for the moment. So we'll stick with that. We're moving into a scenario where investors are replacing paper assets with real assets. Rush Gold is really all about putting an asset in the hands of people who traditionally have not been able to hold an asset or gain access to an asset. But we have a real asset technology platform that has two channels to market. We have our own app where people can buy gold, sell it, send it instantly cross-border. We are the first gold platform in the world that can offer live gold spending in any currency anywhere in the world. We've done that deal with Apple Pay, Google Pay, Samsung Pay, and MasterCard.
Can you speak to that for a minute? How does it work?
So I can go in and buy my Maserati or a pair of jeans. I go into the merchant. I use my Rush debit card, and we're actually doing a live gold trade in the background at that moment. So you don't have to sell your gold, load a card as a two-step process. You're actually at the merchant at that time, tap and pay, you're actually paying for your goods and services. Now what that does and why that's exciting is simply that you can use your gold as a current account, right? Now not everybody wants to spend their gold. A lot of people, quite frankly, want to hold their gold at this time and they're accumulating. However, it does allow you to hold more gold because you don't have to have that liquidation. It provides that liquidation in real time for you. The other side, so not only do we provide gold for our own app, however, we are a platform at the core. We provide gold, embed gold transactions into other apps as well, into other platforms. So we have something called Gold as a Service, and that allows us to embed gold transactions into wealth platforms, banks, rewards, gift registries, and even gaming. We're working on some pretty exciting global projects that are world first in the gaming industry. But what it means is that we don't have to go after one customer at a time. We have very much a partner model, and we provide gold to any third party who wants to work with us.
Where are you seeing the big uptick in transactions and uses of your product? Is it diverse, or is there a particular area where you're seeing the growth and the use?
Anybody can buy gold. We can sell you $1 worth of gold. Our biggest trade to date has been $1 million purchase now, and anything in between there. We very much want to provide access to retail. But our growth now is high net worth. It's crypto users who have made money in crypto and want to park their profits. Self-managed super fund in Australia, for example, retirement funds. People are coming in and they like that ease of which they can buy gold instantly. And we do all the accounting and all of that's required for an audit as well. But also businesses. Businesses are using us to make payments cross-border as well.
The SMSF market, I'm interested because generally an older cohort, but they're really embracing gold as well.
More than ever, very much so.
One of the issues related to the tragedy of the Russian invasion of Ukraine is that the Russian ruble now has been linked to the price of gold. What does that mean for the outlook for gold?
I think that's another example, Peter, of people moving from paper assets to real assets in this market cycle. And year to date, the Russian ruble has outperformed any other currency this year.
That's probably not widely appreciated, is it?
Probably not. However, to many, that explicit link to the gold price gives confidence that wasn't there before in that currency for sure. And I think that's what, we used to have a gold standard, the US dollar, right? And now we don't. But I think that's where we come in at Rush, is that we are actually enabling anyone, someone like yourself, to come in and have their own gold, their own gold holding and their gold current account, in their own gold standard, I guess is what I'm trying to say, just like the Russians have done that more formally for the entire nation. Gold
Traditionally and historically has been difficult and expensive to transact and to hold. Clearly your modus operandi is to change that.
That's why we exist, that's right. So I think what's unique to Rush is that you're actually buying direct title to gold. So there are a lot of ways to own access to the price of gold, right? But read the fine print, buyer beware, right? So we sell direct title to gold at lower holding costs than an ETF, which is really important to many investors, including myself. We custody with Brink's Global Services in vaults in Brisbane and Sydney, and we're expanding in Europe and Asia as well next year. And we insured by Lloyd's of London. We're physically audited by Bureau Veritas, and so we look after your gold. But again, it's liquid 24/7, and you can transfer, buy, sell, send, spend, etc. With new products coming out soon. So
Do you see a real gold ETFs as your main competition, as it were?
Yeah, ETFs have really taken off, but you don't own gold directly, for sure. You don't, if you're looking to hold gold more than a short period of time, the other problem with ETFs is their holding costs are extremely high because you're paying for sub-custodians, multiple sub-custodians along the way, and you don't own the gold, you own a share.
Now, this could be a home run for you. The long-term outlook for gold, and what are the factors that are going to be influencing the price of gold in your humble and expert opinion?
It is humble. We're a very small wheel in a very big cog, but it's inflation, and stagflation is the most ideal scenario for the price of gold. So if you look at inflation, many analysts thought that it was transitory, and some are changing their minds now for sure. We've been pummeled on the supply side with COVID. And yes, we've seen a recovery there, and supply chains are getting fixed. But now we have a new problem on the supply side, being energy, and those problems are not getting fixed. And so on top of it all, governments only can affect the demand side, not the supply side. And they continue to throw money at the problem as well, and debt continues to grow. And so, but frankly, all that is a good story for gold price.
Jodi, thanks for talking to us today.
Thank you, Peter.